Well, taking a look at the numbers, it seems that the banking climate over in Botswana is looking pretty healthy at this stage, given the results. Your assessment of that context within which you're operating?
Well, the Botswana banking market is very strong, has historically been very strong, and the macroeconomic environment augurs for even stronger market going forward.
Taking a look at some of the headline lines on your release today, I mean, loans and advances increased significantly over a short period, growing 31% from December 2010 and then 72% over the period from June 2010. How exactly are you achieving that and raking in some of those loans and advances at this stage of the game, while keeping a very close eye on non-performing loans?
Well, Alishia, the point about our growth is really that it's been driven across the board in all our operations. We operate in 5 countries, and all our countries registered growth in the 6 months and even year on year. But what is really driving that growth significantly is Zimbabwe, which historically, obviously, our book had gone down to almost nothing as a proportion of the whole group. But in the last couple of years, since dollarization, the operation has continued to grow. Zambia has also grown very significantly, and we expect those 2 markets and all the rest of the markets to continue to grow.
Of course, it comes with risks, and as I highlighted earlier or alluded to, it's that non-performing loan line that's being, very aggressively watched at this stage by banks across the globe. So how exactly are you mitigating against the risk that growing that loan book presents?
Well, you're very right. Historically, it was also actually one of our Achilles heels dealing with NPLs. But we are actually coming off an NPL ratio of about 9%, coming down to 5% and trending positively into our target of, say, around about 4%. And so, we're quite happy about the trend. Obviously, we have to continuously watch. We don't have a uniform experience across all the markets. Tanzania is a bit of a challenge for us, but we don't expect that that market is going to deteriorate. If anything, is going to improve. But the nature of that market has been also the length of time it takes to resolve the issues, and obviously the diminution in value of the assets that we finance. So that has been a slight challenge.
Run us through at this point, some of the challenges that Tanzanian market presents for you specifically.
Well, Tanzania, as you know, is a very big market, growing at very exciting rates. I mean, it's been growing an average of about 6% for the last couple of years, and expected to grow at those levels going forward. It's a very attractive market, but one of the biggest challenges of Tanzania is that the legal system, while on paper it looks okay, but the practical process of going through litigation and having issues resolved takes a very, very long time. And that really impacts very negatively on all creditors, but more so for banks.
So let's take a look at, where work needs to be done in other regards in terms of raking in revenue. Non-interest income increased 19%. So what's that being attributed to?
Well, 2 lines. One is obviously our traditional treasury, money markets and foreign exchange dealing, which we've historically been very good at. The other line is to do with transaction income, which has historically not been a very strong part across the board. But as we have extended and expanded into retail, obviously the transaction business is impacting positively on our non-interest income. So we expect that line to continue to grow.
Now, the bank's embarked on a regional expansion drive in the region. What's your next target? Can you give us any hints as to where you've got your sights set on?
Well, I think at the moment our major focus is really to raise the size of our existing operations to levels where we are in the top tier of the banks. We are obviously right now considered to be a small bank, but our major focus right now is to raise our profile to a point where we are considered in each one of the markets to be a substantial player, and we are ranked at different levels, and obviously increase our market share. Our average market share is around about 3%. Our short-term target is to go up to 5%, and then our medium target is to go up to 10% in each one of those markets. We've always said that in broad terms, our primary market is East and Southern Africa, particularly Southern Africa. And so we continuously look at markets like Angola, Southern Sudan, and so on and so forth.
Just very quickly, I mean, with the changing times, it's, you know, your presence is enhanced by more than just bricks and mortar. We were chatting to a representative from ABSA a little earlier on in the show, saying that they're accelerating innovation in the mobile financial services space, specifically. Strides you're making in that regard?
Well, it is certainly one of the major focus of any bank which has got a retail ambition or retail footprint, and therefore we are investing in that area. But obviously, being a new player in the retail space, we are trying to make sure that our brick and mortar is right. Obviously, all our other channels are very robust. Clearly, we can't be talking about most of the plans that we have, but it's certainly an area of major investment and ambition for us going forward.